Hey everyone, it's Kristen Cayley here from Nelson Financial Planning, here to talk to you about your 401k plan and how you can make sure that all the money in there is really yours. A 401k is offered by an employer to their employee, and it can be a very powerful incentive to attract and retain employees. Let's take a look. There are two types of contributions: an employee contribution, which are contributions that you make to your 401k, and employer contributions, which are contributions that your employer makes to your 401k. To attract potential employees, employers may offer matching contributions. For example, let's say your employer will match your 401k contributions up to 3% of your salary, and your current salary is $50,000. This means that if you contribute at least 3% of your salary, or $1,500 to your 401k, then your employer will match that amount, which brings your total 401k contributions at the end of the year to $3,000. Essentially, an employer 401k match is free money, and it's a great incentive because it is a big boost to your retirement savings. But sometimes that free money can have some strings attached. To retain employees, employers may impose a vesting schedule on employer 401k contributions. The contributions that you make from your own money will always be immediately vested, which means that you own 100% of those contributions. Let's take a look at an example. Let's say your employer has a vesting schedule in place that gradually increases ownership over the first 6 years of employment. Notice how after year 1 you own 0% of your employer's contributions, and after the second year you own 20% of your employer's contributions. This means that if you were to leave your job at the end of year 1, you would walk away with only your employee contributions of $1,500. If you were to leave your job after year 2, you would walk away with $3,600, which is broken down into your employee contributions of $3,000 plus 20% of your employer's contributions, which is $600. If you were to leave your job anytime after year 6, you would be fully vested and walk away with your employee contributions and the full amount of your employer contributions, which totals $18,000 in this case. As you can see, 401k plans can offer great incentives to attract potential employees through employer matches and retain current employees with vesting schedules. 401ks also have significant tax-saving benefits, but more on that in our next video. Are you confused about your employer's vesting schedule? Feel free to reach out to me directly with any questions or to schedule a free consultation. Thank you for listening and take care.